You wouldn't think the snail mail business would be a big moneymaker, but for Pitney Bowes, it has been. I'm Jack Otter, editor of BARRON'S.com. I'm here with Jack Howe, senior editor at the magazine. Jack, you've been watching this company for a while. You wrote a story about it for the magazine. The stock is up about 3% today. What's the case for Pitney Bowes?
Well, they have a new CEO since the end of 2012. The stock has more than doubled since then. It's actually outperforming Facebook since he took over. You know, they have a big legacy business with mail machines, metering machines. They sell those to small and mid-sized companies in one division and big enterprises in another division. That business, people think that's falling off a cliff. It's not. It's pretty flat right now. It took a hit during the financial crisis. That business has longer-term leases, so Pitney Bowes had several years to work off the losses from some financial customers that went away. But now, if you look last quarter, pretty flat, down 1% for small and mid-sized businesses, up 1% for big enterprises. And the profit margins are profane. I mean, they would make Apple jealous, the profit margins there. So,
well, people don't send letters anymore, but I guess companies do, right? The mailbox is still full of catalogs.
Sure, right. Mailing campaigns, everything else. So you generate a ton of free cash there. The question is, how do you get some growth? So what the new CEO has done is he's taken a look at these, little businesses that Pitney Bowes picked up over the years from acquisitions, and he's identified a few key areas. For example, global shipping services, where if you sell something on eBay, and someone buys it halfway across the globe and it's complicated to send it to them because of customs and so on and so forth, they handle those details in the background and makes it easy to sell your stuff and ship it. Another one is location services. They actually have some pretty sophisticated algorithms and mathematicians there to do pinpoint location. They sell that to social media companies like Facebook and Twitter. So those areas you had revenue growth there last quarter of 23%. So between the gigantic cash flow on the mail side and now some fast growth from these digital businesses, the stock has already played valuation catch-up where you've gone from a single-digit price-earnings ratio up to about a 14 with the market closer to 16. I don't think that PE ratio is going to go much higher, but you could see earnings go from $1.88 a share last year up to probably close to $3 in 3 years. And I think the stock's going to track that earnings growth rate. So I think there's more upside to come for Pitney Bowes.
Very interesting story. Let's move on to TD Ameritrade, another business that was booming and then not so much as trading proved to be not so lucrative. It's bouncing back a little bit, and there's some interesting trends that are causing more trades to take place.
Yeah, and with a business like this, the costs are all sunk costs. As you get more trading, those profit margins can ramp up quickly and earnings with it. And our writer argues that, first of all, they're not making great money on money market deposits right now. No one is. But if you have even a little bit of an increase in interest rates, you can make a lot more money there quickly. And as trading volumes increase, that tends to come in a longer-term wave, not necessarily a blip for a month or two, but a cycle that could last years. And if you get that, you could see earnings for Ameritrade ramp up quickly, and the stock could have some upside.
One interesting trend is that so many financial advisors leaving the big firms and going out on their own, and of course they need a platform, so they hook up their clients with TD Ameritrade.
And they've done a lot of. They've been mostly a trading company for active traders in the past. Now they're going after more longer-term business with what they call the mass affluent. I love this. Those are people with investable assets of $100,000 to $750,000. So if you're in that range, you're not rich, but you are mass affluent.
That's good to know. Yeah. Finally, I don't think Barron's can take credit for Pfizer's bump today. However, it was kind of a path that we laid out, and lo and behold, the future occurred as we predicted, and it looks like the Pfizer-AstraZeneca deal may not happen.
Andrew Berry said that they should walk away from it, that it wasn't a good deal. I mean, they're paying a much higher price than their own price. And in the past, they've had some big deals in the past that have resulted in kind of a bloated company. So, Andrew didn't think it looked good. The deal got turned down. There isn't a lot to suggest out there that Pfizer is going to go chasing after this deal. And investors seem to like that the deal isn't going to happen because the stock price is up.
Taxpayers may be happy too.
Yeah.
Thanks very much, Jack.
Thanks.